Junior gold miners have a 60% upside over the coming weeks, says our next guest, Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. We're going to be talking all things technical analysis today with Chris. But before we speak to our expert, where do you think asset prices are headed? Which of these do you think have the highest upside potential going into the November 3rd election? Gold, gold stocks, or the S&P 500? If you're watching this on YouTube, comment down below and write your response. Chris, welcome to Kitco. It's a pleasure to speak with you today.
Yeah, thanks for having me, David.
Before we talk about your forecast, Chris, let's look at what's going on in the marketplace today. Robinhood, the trading app, has advised its users to buffer up on cash and prepare for more volatility up ahead in the markets. Have you ever seen a statement like that before from a broker? I mean, they're not the only ones doing it, by the way.
I'm actually surprised they're doing that, but I guess they can see huge volatility coming. I mean, a couple of weeks ago, we saw Interactive Brokers tighten their margin requirements. So, which is really interesting. When they sent out that issue and it went into effect the next day, the stock market actually fell 2.5%. Interactive Brokers, huge institutional side, huge retail side, and people always do the same thing. They always buy the house just outside of their price range. They always buy a few more shares of a stock than their account can really hold during a volatile time. And so when they up that margin requirement, people, I guess, were forced to liquidate positions. And I think that was a good reason why the stock market pulled back. I mean, you look at the CME, Chicago Mercantile Exchange, they loosened off their circuit breaker on the indexes because I think they see so much volatility coming. They don't want the circuit breaker to get hit multiple times.
We're going to be talking about volatility and your outlook later on in this interview. But do you agree with them? Do you see a lot of volatility coming up?
I do. As much as I don't want to be bearish, I mean, I think this is all going to unravel into a pretty nasty way. But it's really going to come into COVID. If the second wave of COVID really wreaks havoc and locks down North America or Canada, and the US gets really strict on their rules, that's going to put us into a death spiral. We'll do the double dip scenario for sure, is my thinking on the stock market. And so you got to be aware of it and you got to be ready.
Yeah, we're going to be talking about the stock markets later on. Do you, as a trader, do you want to see volatility?
I do. I mean, volatility is great. I mean, big moves mean lots of opportunity. You just got to make sure you're on the right side. You don't get over positioned, which is one of the number one things that people do. And that's the one thing I really stress with the traders that that follow me with my newsletter is I focus on risk and position sizing, because that's the biggest problem. People buy too many shares. And when things go sour, they take way too big of a loss for that one trade based on their overall account. Like, people are betting 25, 50, 100% of their money on individual trades, and they've got big stops on them. So that's the biggest thing. You've got to take bite-sized trades. You've got to have stops in place, and you've got to follow through with the stops. And that's where a lot of traders fall into that problem, is they can't admit that they're in a losing trade and that they were wrong. And you've got to stop yourself out when you get hit. And that's the hardest thing to do. But getting stopped out on a trade is actually a really good thing. It means you're able to follow your rules. You'll be able to stay dedicated to a plan, because you really need to trade with a plan. And if you don't follow it, you're going to be hanging on to all the losers, and all your winners will have kind of run away without you, or you've missed them because your money's tied up elsewhere.
All right, so Chris, I know you're a technical analyst, so let's walk through the technicals here. What are the chart formations you're looking at that's feeding your outlook?
Sure. Okay, well, let's take a look at the daily chart of GDXJ, and we're going to zoom in here to really, this is this year's price action. We've got January over here. We had the COVID kind of sell-off. And then since then, we've gone to this kind of double wave bull flag formation. And if we were to take using Fibonacci extension, which is a very powerful tool, I use it to find resistance and targets. We could take this previous low here, go up to these highs, and grab this most recent low. And that'll give us our upside momentum just based on this last run in price. And there alone shows that we've got about a $75 upside target for GDXJ. Now, that's just based on this overall momentum. Now, overall, if we were to extend this price down to these lows to the extreme, which is where this first major bull flag or bull flag pole ran to, and now we've got a multi-month consolidation, it actually gives us the full measured move of the upside target for GDXJ, reaching potentially all the way up to $98. So there's a lot of upside potential, depending where you draw that. Actually, I'd be going from this level right here. This is where the initial rally started post-COVID. So we got around this $90 target, somewhere around the 60+% range. And this bull flag pattern is a signature move when we're in a bull market, which gold miners broke into a bull market this year. This is like the first major pause within a bull market. And the first pause or pullback in any trend is usually the best opportunity to get in. And so the bigger the pause, the bigger the move. And so when you look at this giant flagpole and this giant flag flagging out here, this is pointing to a really significant run over the next 2 to 3 months. And because it's in a new bull market, there's a lot of energy built up in here. So when it starts to run, I think we're going to see, a very nice trend that happens very quickly.
Right. So Chris, like you said, we've seen, just looking at your charts here, we've seen a pause in the formation since August. And you're saying that the bigger the pause, the bigger the move. Well, could it move to the downside, Chris? What exactly are pointing to bullish upside potential here?
Well, yeah, the bullish upside, the Fibonacci gives us a nice upside. The downside is we'd probably be coming back down to this green line. Now, this green line is the 200-day moving average, kind of a long-term trend. It actually coincides with this bull flag here, this consolidation, this previous high over here, which is where gold miners actually broke into a bull market. So this is where it broke out and started a new bull market. And now it could come all the way back and get down to that area. So there's a downside potential somewhere around that $45, $47 if it was to sell off from here. But that'll be a pretty major support zone because that's the beginning of where the bull market started. It's long-term support. And because this the way this sector is, especially with the dollar moving the way it is, if everything comes together, it should be a great opportunity actually if it gets down to this area. But you really do need to wait for a technical breakout. We want to see it break some type of upper trend line across here. We want to see it start to break through that. And we want to see some momentum in silver miners as well to help kind of give confirmation that it's not just gold miners that are more heavily watched, but it's all the gold miners across the board.
All right. So when we're looking at the technicals now, what indicators would you be watching for to give you a bullish or a bearish outlook? Because I'm looking at this chart here, it's been kind of flat. Are you looking at Bollinger Bands? Are you looking at moving averages? Are what are your standard deviations? What are you looking at? What's going to be the next break downwards or upwards?
Yeah, so I do like moving averages. They give you, in Japanese candlestick theory, moving averages are actually one of the most powerful tools. So really, we want to make sure all the moving averages or the 200-day moving average is sloping up. That means long-term, we are in a trend. Technical analysis, pretty basic theory. A trend is more likely to continue than it is to reverse. So if the long-term trend is up, you want to stick with the long-term trend. And then we want to get the price above this blue line. This is the 50-day moving average. That's kind of an institutional level. A lot of money moves in and out at those levels. When you break below it, you get stuck under it, which is where we are now. And really, we need to see it break above this blue line, which is the 50-day. We want to see this 20-day, the pink line, actually sloping up as well. And we want to get above this falling trend line. If we can see price move above all three of those things, then really we should be off to the races for gold miners to go a lot higher. So those are...
Are you going to be positioning now for a buy, or are you waiting for those blue and purple lines to trend higher first?
I'm waiting for price to break out because as a trader investor, I mean, the only way we make money is when price moves in our favor. And it could get rejected here very easily, depending what happens going forward in the markets. I mean, if we have COVID start to flare up, we're going to see selling in the stock market, which pulls metals down. It'll probably send money into the dollar. And we could very easily see this come down to this 47 level. At this point, you really got to be cautious because it's really just trading in this channel. It could continue to work itself down over time. So I like to wait for a breakout. We're in a bull market, so you can wait for the breakouts, and they should have nice follow through after they break out, just like they did over here. Once you get a breakout, you just see price start to expand and run away. And that's the joys of being in a bull market, is there's a lot of energy, pent up excitement, And when it starts to break, everyone's going to chase prices higher and drive it up.
How frequently would you trade, Chris? Because if you just take a look at those two lines that you just drew, there's a lot of short-term volatility even within the last couple of weeks to a couple of months, all depending on your time horizon. So would you be going in and out every day, or would you position yourself more for medium or long-term outlook?
Yeah, well, the style that I do, I'm more of a swing trader, position trader. So I'm looking for the leading sectors that are about to start a multi-month kind of run. And as you can see, we had a multi-month breakout and run here. Now it's been dormant for a couple of months and we haven't traded it. We're waiting for the breakout for the next leg up. I don't really want to trade this chop. I'm not that short-term of a trader with the newsletter that I offer, but there's lots of volatility in here if you're a momentum or day trader to be playing this stuff. But for my strategy, I'm looking to catch things when they're in an uptrend or a downtrend, but when they're chopping around counter trend, which means it's fading lower, but it's still in an uptrend. I don't really want to bet against it. I just want to wait for it to consolidate, start to break out, and then get in for the next run.
Can we take a look at the gold bullion now? I know that's a sort of an underlying driver of the GDXJ, the commodity itself. So how do you feel about the bullion right now?
Yeah, I like gold. I like physical gold, especially for long-term investments, kind of cash preservation. More or less, it's very similar type of price action where gold actually broke into a bull market mid last year. So it's been in a bull market for a while. This was the first pause and pullback in gold way back over here, just like what we're seeing in gold miners now. The first pause and pullback is a killer opportunity. If you miss the initial breakout, this is the next area here. When it starts to break out, you want to get involved. And of course, we've seen it make a series of bull flags. We're back into another big bull flag, which points to much higher prices. I think we're going to have some near-term volatility potentially with stimulus, COVID, election. But overall, this is still a very strong pattern, and it is pointing back up to these higher prices of 2,100, potentially get to maybe 2,300 by year end.
Yeah, correct me if I'm wrong, Chris, but it looks like the blue line here is pointing downwards. It's showing a bearish trend. Is that
right? So we just want price to more or less be above it. We want to see price above the 20-day, the 50-day. Those are kind of just the key thresholds to get us going. But you're right. Right now, this is the concern. This is why you don't want to get too excited about GDX and gold miners just yet, because they are still making a series of lower highs. They're making a series of lower lows. We are in a downtrend. That's the pretty simple definition. We're also under the 50-day, which is a really important resistance area. So all of this whole sector, the precious metals sector, is struggling with almost the same pattern. They're all stuck at the 50-day underneath it. And so we really do need to see price start to expand and move up. And they really all need to do that together at the same time to give us that confirmation that it's a full-blown market. It's not just speculative traders driving gold miners up, but we're seeing gold break, silver break, and miners as well.
What do you think is the floor here, the support level?
I think around 1810 is where we've got our potential support level. Depending how long that takes, we might even see the 200-day work itself up to act as a long-term support zone. You can see back on the chart here, 200-day works as when price falls very sharply into one of these key moving averages, like the 50-day, the 200-day, something like this. You usually get a knee-jerk reaction bounce off it, just because it's an opportunity where institutions move in. It's an opportunity where a lot of long-term investors who aren't that active kind of just jump back into the market. And so that's what could eventually happen where we are here. This could flag out for a little while, but I do expect to see metals start to move higher here and break out versus it really going down to test. But a lot of that's going to come down to what happens with COVID, because I think the only fear in this market isn't about who gets elected. It's not about the stimulus plan. It's actually about, is COVID going to flare up again? And if it does, that means, energies are going to crash even more. Businesses are going to struggle. People are going to panic and sell their stocks. It's going to pull all the asset classes down with it. So that's the only fear factor right now is COVID. Is it going to get out of control in the US? I mean, Europe's already kind of in lockdown mode. So that's the real threat here.
How do you see volatility levels for gold? If you take a look at these huge drops in mid-August and in September, What happened there?
Well, it's really just money kind of positioning in and out of different sectors, right? There's sector rotation. I use a strategy called BAN, which stands for best asset now. And really it's just a constant, the markets are constantly shuffling to find where the best opportunity is. So when something gets overextended, kind of like what gold did over here, it's had this massive run. Eventually it gets overextended and big money starts to look for where's the next hot sector. And once it starts to sell off, it creates this waterfall drop because the faster something goes up, it attracts a lot of short-term momentum traders and they kind of have a tight stop chasing those moves. And then so when it starts to unwind, you usually get these very sharp drops and then it loses its momentum. And then eventually price will, if it doesn't pick up speed and take off again, it goes dormant. And all that money says, you know what, this sector is dull. I'm going to go somewhere else. And eventually money moves out and it'll break down and sell off again. And this is where other sectors will come into play and start to outperform. So it really is just money rotating around. Different types of sell-offs, like this one was more based of momentum. There's just a lot of people chasing price up, very publicized in the media. And when something goes straight up, it usually comes straight back down for at least half of the move. And that's just what happened there.
Well, I think what a lot of gold investors are wondering, or gold traders are wondering, is why prices haven't retraced the August highs. If you look at the chart that you're showing us now, it looks like the last couple of weeks to a couple of months, it's been consolidating downwards. And the 50-day moving average has kind of peaked. And then now, as we talked about, it's trending down as well. So are you seeing a bearish pattern consolidating here? Because remember last time in 2011, we saw a high, and then it never really recovered past its highs again. And then we saw a bear trend, secular bear trend for the rest of the decade. Is that what we're seeing right now?
Yeah. So depending on your time frame, I mean, we've got a strong run up. We got a bull flag. We've got another run up and then another bull flag. But in the near term, I mean, we're in a downtrend. We're making lower highs, lower lows. This was a pretty big breakdown, this move right here. And you can argue this looks like a bear flag, which means we're actually going to go lower. And because we're stuck under the 50-day as well, and you can see it's curving down, it's lost a lot of its momentum. And that's why I keep trying to reiterate that. I mean, there's a lot of upside in this sector if it can break out. But the problem is it might not. And you don't want to front run it and get in now, because as soon as you get in here, it could very easily drop and get rejected at these resistance levels, right? So it is bearish in a short-term basis, and it is pointing to lower prices. But as a longer-term investor, swing trader, when it breaks out of this bull flag, it's going to be one of the leading sectors, I think, going into year end.
So I guess if I could summarize, what you're saying is it really depends on your time horizon, because if you're a longer-term trader, it really doesn't matter. You can get in now. But if you're positioned more for the short term, you should wait. Is that what you're saying?
For sure.
Okay.
Yeah.
And so your longer-term outlook is still bullish?
It is, yes.
Okay. We've got a few minutes left. Let's talk about the equities now, SP 500. You were telling me offline that you were feeling bullish on that as well. Let's look at the charts there.
Okay, so the SP 500 had kind of its September pullback, and we've had this nice kind of move back to the upside, and it's been pulling back the last week and a half. So right now we're struggling with trying to get more traction to the upside. And right now we've got COVID kind of creeping in. We've got the elections. We've got the lack of stimulus plan coming into play here. So the market's been consolidating, but overall, the major trend, the 200-day moving average continues to be up. We're still making a series of long-term higher highs and higher lows. Overall, this looks like it's a nice bull flag formation, and it looks like it's ready to continue to move to the upside. And I think as soon as we get word of some stimulus plan getting passed, I think we're going to see this really take off to the upside. More or less, we're in a consolidation pattern, something similar like over here, where the market corrects, and then it takes a little while to eat through the previous resistance and for something to kind of break it free and for it to run in a new trend. And that's where we're at. But at this point, I mean, we're definitely in a longer term trend. If we look at just this is a trend analysis of kind of what my technical analysis is saying. We've gone into a short-term downtrend where people were moving into risk-off assets. Now they're back in. This is the SP5, this is a QQQ, but pretty much the same chart. More or less when it's green, this is when people are still dumping money into stocks. And you can see we're settling right down in the key moving averages, and we should continue to move higher. And I think there's going to be a pretty substantial run post-election once things get settled.
Yeah. Do we see a positive or negative correlation between gold and the U.S. equities? Because people usually talk about how they're inversely correlated, but is that what the charts are actually showing?
Not so much. I mean, if we go back in time over here, you can see gold had a big run in price, and the equities market, the SP 500 in the top chart, also had a big run. And then, of course, we got into the financial crisis and we hit forced liquidation. We had literally people were selling for fear of death. I mean, it was the scariest time ever. And so everything sold down. But now we've got stimulus. We've got all kinds of uncertainty. We've seen stock prices rise. We're seeing gold more or less rise as well. But we're really in this kind of euphoric stage in the stock market where people are kind of been moving into the stocks, and everyone's all hyped up and they're not that interested in gold at the moment. But there's going to be a time when things kind of outperform. I mean, if we look at this chart here, you can see gold traded sideways more or less, while equities rallied. But gold is continuing to hold its value because we really are in the perfect storm for precious metals. The more issues we have with the economy, the more bullish it actually is for metals because of stimulus and currency issues and all those things. And then eventually, if we take a look here, you can see the stock market pulled back. It went out of favor. And that's when gold really took off and exploded in favor. And then now we're at a point where really we're not seeing a whole lot of headway in the stock market. Gold's been out of favor for a little bit. And that's just, I think we're just taking a big breather in the markets in general. We're seeing hot pockets in certain sectors like solar, clean energy. And then we got bad sectors like energy sector, like crude oil, XLE, and the oil services. So we've got sectors now where we're really driven by sectors. The stock market's starting to struggle, but there's hot pockets. And I think it's just a matter of time before we see the precious metals sector start a new leg higher. And we could see the equities market chop around here for a month or so with the elections and stimulus kind of all in limbo. So we're really coming to a perfect storm for metals to break out as long as we don't have a COVID flare up.
I think the common denominator between both of these indices going up in the summer was quantitative easing, right? You got a lot of liquidity being pumped in by the central bank, and that's positive for both equities and for gold. So I wonder what the next common denominator is, because clearly the markets have already priced that in right now.
They have, and everyone's already kind of expecting stimulus, even though it hasn't come. I mean, everyone knows it's coming. So that's why the markets, I think, are struggling here. I think when a stimulus plan does come, that's probably when we're going to see metals start to break out to the upside. But you never know. This is such a unique, crazy time in the financial markets. You really got to take it day by day.
All right, Chris, that was a great talk. I look forward to speaking with you again. We'll talk about the US dollar and we'll get more granular with the sectors next time. Thanks very much.
Sounds great. Thanks, David.
And stay tuned for more technical analysis with Chris. I'm David Lynn reporting for Kitco News.